Three, two, one, and we're off. It's a little bit challenging because I only have one camera, two cameras. So it ought to be interesting. Virus protection. Ooh, Dee's here. Linda, Andy, Rob, Bob, Ray Wendell, Waddell, Ray Waddell, Tiga, Dallas Guns, back again. I remember you. You were here before. Well, let's get ready to get started. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest dividend stocks for weekly cash flow, take you along for the ride for a safe, predictable, consistent 1% per week. Ooh, I forgot. Simple, safe, predictable, consistent. Brian, how you doing? Charles, what's up? Kevin, Chris, Sean? Alrighty then, let's get started. Now, if you guys are new here and you don't quite know me yet, I'm looking for a simple, safe, predictable, consistent 1% per week off of my investments. Now, I use pre-qualified dividend stocks. Those are companies that have consistently increased their dividends to their shareholders for more than 20 consecutive years. Now, why am I looking for dividend stocks? Well, here's the thing. If a company's been in business long enough, they start to share their profits with the investors. That's what I'm looking for. Safe, predictability, and consistency. Well, I want 1% per week. That's over 50% per year. That being said, I'm going to share with you a simple trading strategy that I created for my 9-year-old daughter. Now, for those who don't know yet, those who have been following me for a while, let me quickly show you what we're talking about. And where is it? It's not popping up. Alrighty. Okay, go to my YouTube channel, and we're going to show you a quick video of the Little Princess videos. There we go, and the oldest. For those of you who don't know, here's my daughter right here when she was 9 years old.
And as you being part of my internet website club thingy, which my dad doesn't like me calling it that, but I do.
Turn it up a little bit.
Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from that help you.
Okay, so that's JC, my daughter. This is made 15 years ago. I've been doing the exact same thing for over 15 years. This is my favorite part coming up right now. Ready? That thing always makes me laugh every time I see it. Now, why am I showing it to you? Well, I'm showing it to you because I've been doing this for quite a while. Simple, safe, predictable, and consistent 1% per week. That's what I'm looking for. Fatias. Okay, cool. CR. Coffee Chica. How are you? So, like I always said, I created this trading strategy for my 9-year-old daughter in 2008. She jumped up my lap and said, "Daddy, can you teach me what you're doing?" Well, I was trading stocks at the time. I wasn't doing the greatest in the world. I've been doing it for 20 years, okay? However, the first 5 years really weren't that great. So when my daughter, 9 years old, asked, "Do I do the wheel strategy?" Yes, I do, but that's not what I'm showing here, okay? None of your business. Back again. Cool beans. Misty, Trey Guy. I don't do Misty because it doesn't have dividends. When you come to a show that says dividend investing for weekly cash flow, oh, I love that one. That's my favorite. When people ask me, couldn't you just put it in the S&P and get 8%? Dylan, 8%? I get 50% per year. Why would I put something into the S&P and get 8%? Now, if they're giving 8% per month or 8% per quarter, maybe. 8% per year, no thank you. As I was saying, Gabe, we talked about this before, Gabe. I remember you before. SCHD does not work. I like dividend stocks. Dylan, you don't like 50% per year. Dude, I can't help you out then. So, as I was saying, my 9-year-old daughter asked me, said, "Daddy, can you teach me what you're doing?" So, I had to come up with a strategy specifically for her. It had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. So I came up with 5 rules specifically for my 9-year-old. SCHL. Okay, Gabe, give me a second. We'll take a look at that. So I came up with 5 rules. Rule number 1, never buy something you don't understand. If you don't know what the company is, don't buy it. If you don't understand it, if you don't know what they do, if you don't know all the details about it, don't put your money there. Okay, so Tom, you actually got to give me the ticker symbol for me to take a look at. Just saying drones doesn't help me. Trey, RNPUGT, coin, and RITM. Okay, Trey, we'll take a look at those. Hold on a second. Somebody wants me to take a look at SCHL, so I'll take a look at that first. But here's the thing. 5 rules. Rule number 1, never buy something you don't understand. If you don't understand it, don't buy it. It's actually that simple. Rule number 2, never sell at a loss. Never sell at a loss. Rule number 3, make sure the company is consistently profitable. What do I mean by that? I want 2 decades of consistent profits. There's 9,800 different companies you can choose in. Well, actually, the number is 9,797. That's about 9,800 companies that you can invest in any single day of the week. However, only half of them pay dividends. The other half take all their profits and put it back into the company for capital growth. So I'm going to tell you right now, if you are looking for capital growth, are you looking for a stock that starts from here and goes straight up? You are in the wrong place. You're basically wasting your time here. That's not what I'm looking for. I'm looking for specifically cash flow. More specifically, 1% per week. Now, let me show you quickly. It won't take long to see this. Okay, this is my website, The 10-Minute Trader. I share 3 accounts with you guys. Account number 1 has $168,000. $168,000, 1% per week is $1,700. That's 1%. Account number 2, $190,000. Roughly, that's about $2,000 a week. Account number 3, $131,000. That's about $1,300 a week. 1% per week is what I'm looking for. Now, 1% a week is about 50% per year. Compounded at 62, 67, somewhere in that area. Okay? Now, let's take a look at some stocks you guys want to take a look at. Oh, by the way, just scroll down all my trades right there. All you have to do is just click on one. It opens up. Here's the timestamp, when I actually bought it, what kind of a trade it was, what the stock was, what the call strike, all that. I'm actually going to be going through a couple of trades for you. I'm not going to hold anything back. I'm going to show you exactly what I do. See, after this, you won't need me at all because I'm looking at certain companies. Okay, well, let me tell you what they are. If you got a pen and paper handy, you might want to write these down. Dividend Kings, 54 companies that have consistently increased their dividends to their shareholders for more than 5 decades. Second list, the Dividend Aristocrats, 67 companies that have consistently increased their dividend payments to their shareholders for 25 years. Dividend Champions, 150 companies that have consistently increased their dividends to their shareholders for more than 25 consecutive years. Yes, the Dividend Aristocrats and the Dividend Champions, both 25 years, but the Aristocrats a little bit more stringent on their requirements to become a Dividend Aristocrat. List number 4, the Dividend Contenders, 10 to 24 years of consistent increased dividends. Now, why am I focused on dividends? Oh, wait a minute. List number 5. I want to peek over the shoulder of Warren Buffett and see what he's trading. So yeah, I take a look at Warren Buffett's list and I copy some of those. Why am I concentrating on dividends? Well, a dividend is a portion of the company's profits that they give back to the investors. That's me and you. So once we buy and sell stocks, we become investors. We become part owners of the company. So whether you have 1 share or whether you have 1,000,000 shares, you own a small portion of the company. You and me are entitled to a portion of the dividends. Okay, great. So when I isolate the dividend stocks, okay, there's about 300 that have increased for more than 2 decades. I stick them into a calendar. Okay, what we're looking at right here. Let's open this up right here. That's not, oh, there we go. Wait a minute. There it is right there. Warren Buffett's list. Okay, now you probably heard of some of these. This is Warren Buffett's list. We have Bank of America, General Motors, Occidental Petroleum, Mendelez, U.S. Bank, American Express, and Bristol Myers Squibb. You probably heard of all those companies. That is just stocks for the month of December, Warren Buffett's. If I go to the month of November, well, we got Johnson & Johnson, T-Mobile, Coca-Cola, KHC, Kraft Heinz, Moody's, Kroger, Wells Fargo, Apple, and a bunch of others. Okay, so I'm looking at the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's 300 companies consistently increase their dividends. So why am I putting it to the calendar? Well, the calendar tells me when to buy the stock. I want to buy it 2 weeks before the dividend. Now, there's 4 dates to remember when you're looking at a dividend stock. Date number 1, the announcement date. That's when the company comes out and says, hey, this is Peter from Coca-Cola. We're having this much profits this year, and this is when we're paying out our dividends. The announcement date, that's date number 1. Date number 2, that is the EX dividend date. That is the last day the stock trades before the dividend's paid out, represented by these little green dots. Each one of these little green dots represents a company and when they're paying their dividend. Why is it important? Well, just before the dividend, the stock has a tendency to go up in value, which means if I know when a stock increases in value, that's when I buy it, based on a few other rules. Okay, we're going to get into that. We're actually going to do a couple of trades so you can see exactly what I'm doing and what I'm talking about. Now, if I want to buy a stock and I want to collect a dividend, I need to buy it before this date. But I don't want to collect the dividend because after the dividend is paid, the stock has a tendency to go down. Don't want to do that. I want to grab the stock before it goes up in value. That way, as it's increasing in value, I can get my 1%, jump in, jump out, and then move on to the next company. Every single week, I will buy 2 or 3 stocks because I don't have a shit ton of money. I may have 5 positions, okay? Okay, I got 6 accounts. I share 3 of them with you guys. I already showed you where they are. Okay, whoops, get out of there. Okay, these are the 3 accounts I share with you guys. You can go and take a look at every single trade I've done so far. So you see if I'm actually blowing smoke or if I'm actually telling you the truth. Okay, I'm not trying to sell you anything. I have nothing to sell, so don't try to break out your wall and say, ooh, what's he selling? I'm not selling anything. I'm sharing information. I'm tired of the little guy getting shit on and while the guy's on Wall Street making the big bucks. So if I can show you how to simply, safely, predictably, and consistently get 1% per week, maybe it might be worth 10, 15 minutes of your time to just listen. That's it. The only thing I'm asking you is, number 1, does it make sense? That's it. Does it make sense? Either it makes sense or it doesn't. Okay? We're going to buy a good quality stock. Buy it just before the EX date. Sell somebody a covered call, which is a stock option, for them to buy it for basically the exact same price I just paid for it. Pick up 1%, be out of it on Friday, be back into cash over the weekend so I can have my money all back in my account on Monday and do the whole thing over again. Does it work 100% of the time? Nope. Sorry. If you're looking for a magic bullet, this is the closest thing I've come to. It's simple, it's safe, it was created for a 9-year-old. When my daughter was 9, she wanted to learn to do it. Great. Adults have a tendency to mess things up and make it more complicated than it needs to be. So I'm going to go through a couple of simple trades, show you, and you tell me if it makes sense. I'm basically going to go off the stocks that you guys give me. Now, I'm looking for a couple criteria. Very important before you ask me to take a look at something. Number 1, does it have dividends? No dividends? No thank you. Number 2, does it have weekly options? Sweetie Swag, nice to see you. Thank you for that. Does it have dividends? If it has dividends, great. If it has weekly options, even better. Okay, I'm looking for 2 criteria and 2 criteria only. Consistently profitable and weekly options. Okay, I want weekly cash flow. Okay? I grew up in the 70s and 80s. I went to work 8 o'clock in the morning on a Monday. By 5 o'clock on Friday, I was done. Stock market's the exact same way. I get in, 5 or 10 minutes, do my trades, boom, I'm out. On Friday afternoon at 3:59 is my last opportunity to make sure that I am correct. All right, so let's look at a few. First off, SCHL. Some strange reason I'm thinking it's going to be a no, but you know what? I told you I'd take a look at it, so let's take a look. Okay. SCHL. I'll try it again. SCHL. No. Okay? Gabe, sorry. SCHL. Monthly options. Okay, when I say I want weekly options or weekly options only, monthlies just don't work for me. The reason why they don't work for me is because I can only do them once a month, which is only 12 times a year. Now, I admit I did not go to college, but I do know that 12 is not as good as 52. Because if I'm getting 1 or 2% from each option trade that I do, why would I want to do 12? That's only 12% a year. At 2% a year, it's 24% a year. 12 to 24%, it's not that bad if you think about it. But no, I want 50 to 100% a year. That's what I want. Simply, safely, predictably, all that. I already did all that. But anyway, SCHL, no, sorry. Okay, so Trey. Now, Trey, I'm going to be 100% honest with you, okay? Number one, I never heard of any of these. I've heard of Coin. That's about it. Other than that, I haven't heard of anything. All right, hold on a second. Hold on. Where were we? Right here. Here we go. All right, Trey, you ready for this? NRP. Is that right? No, RNP. RNP. What is that? Cohen, Searns, you get no options, no thank you. Sorry, UTG. No options, no thank you. CION, never heard of it. Monthly options. Monthly? No, doesn't work. RITM. No, monthly option. Trey, weekly options only. Amy, how are you? I'm having fun in Vegas, Amy. You should have came. All right, Ride it to zero. Yeah, no thanks, Tom. So let's take a look at these questions. Dallas, DX has EX dividend coming up. What the heck is DX? Dallas, you've been here before. Come on, Dallas, you've been here before. I remember. Dallas, that's a monthly. You know I don't do monthlies. Why would you suggest it? Love the cash flow analysis. Gabe, thanks. What is your portfolio year to date? LOL. Okay, LOL. Why don't you give me your real name first, and then I'll tell you my year to date is. Because apparently, when I showed you this screen right here, it says account number 1, year to date, profit and loss, 84%. Year to date, profit and loss, 80%. Year to date, profit and loss, 9.3, 9.5. Well, this one here is only 6 months old. Okay, so it's not a full year yet. All right. Next on the list. Love cash flow analysis. Cool too. If my trading count 7,000, is that enough for multiple trades? Cool too. Yes, but I can't tell you what to do. I can analyze what you asked me to take a look at, but if I don't know you, I can't give you any advice. Okay, if you really want to talk to me, there's about 200 people here. If you really want to talk to me, now listen closely. There's a little over 230 people. There are about 29 other people pretending to be me. If you really want to talk to me, send me your phone number on the DM and I will give you a call. Seriously, if you get a text message, an email, a video, or anything like that saying it's me, no. I'm old school. I have no problem admitting I'm old school. I do things the old-fashioned way. I actually like to talk to people. All right? Are you up 60% year to date? I'm way over 60%, dude. All right. What's your portfolio year to date? I already told you that. It's over 80%. What about bowling options for the list of put options to short? RS, you got to be more specific. DX has good dividend coming up. DX, I get that. All right? I understand that, Dallas. Really, I do. However, you're not listening when I say I don't do monthly options because the numbers just don't work. 5 rules. Rule number 1. never buy something you don't understand. Rule 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options are a must. Rule 5, make sure the numbers work. The numbers do not work on a monthly option. I can only do it once a month. That will not give me 50% per year. And if it does, how am I supposed to figure out? Hold the phone. Where are we, on the 22nd? Okay, Dallas. This here, let's open it up a little more so you can see it better. This here is 30 days. Okay? Here's your low way over here 30 days ago. She goes up, pulled back, up, pulled back, up, pulled back, up again. Great. Now tell me, where's it going to be in 5 weeks? I can give you a good idea where it's going to be in 5 days, because you get a 30-day bottom here, a 30-day top here, a new bottom here. What happens after a new bottom? Well, once people take their profits, they say, wait a second, this sucker's low, let me start buying it. More than likely, she's going to start going up again. That's a rough idea for the next 5 days. Tell me where it's going to be in 30 days. Yeah. I don't do monthlies. They just don't work. Hockey Sniper, thoughts on WiMAX? Yeah, they're not 20 years old. They don't have 20 years of consistent increasing. You picked a bad stock. Sniper, no, I didn't. Okay, it's not my list. My list is a little bit different. I only do companies consistently profitable. WW, what a nice strategy. Thank you for that. I created it specifically for my daughter. Do you exit before the payment date? Of course I do. Because on a payment date, wait. Hold on a second. 4 dates to remember. Announcement date, that's when the company announces it. Second date is the EX date, the last day the stock trades before the dividend is paid. Third date is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Date 4, the payment date. Okay, I don't want to collect the dividend because after the dividend is paid, the stock has a tendency to go down. And the premiums are usually higher than the dividends. So why would I collect a dividend once every 90 days when I can collect a premium every 7 days or until it hits my target? What's my target? My target's 1%. In, out, 1%. Thank you very much. Sharing is caring. You're welcome. Okay. Follow the creator. La 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 la. Sweetie Swag. Thank you for that. Gary LaFrancis. How are you? Sweetie Swag. Okay. WW. I like the 1% a week because it makes it look a lot easier. Okay. WW. Okay. I told you this a little earlier. Adults have a tendency to make this more complicated than it needs to be. Remember, I created it for my 9-year-old daughter when she was 9 in 2008. She's 25 now, so it's a little bit different, okay? But it had to be simple. It had to be safe. And you know why it had to be simple and safe? Well, number one, she's 9 years old. Number two, if she loses any money, what do you think she's going to do? Seriously. A 9-year-old little girl starts losing money, she's going to cry, dad's going to feel like shit, mama gets involved, I'm going to be sleeping on the couch. No, thank you. Okay, it just doesn't work. Simple, safe, predictable, consistent, no way for her to lose. That's the strategy I came up with for a 9-year-old. Adults, okay, those over 18 have a tendency to make it more complicated than it needs to be. If you go to my website, first thing you're going to see, okay, right there, simple, safe, predictable, 1% per week. Live nightly training, 9 p.m. Eastern Standard Time. I'm in Vegas at the moment, so I don't have my normal setup, so I apologize for that. But number 2, second page, look at it says right here. If you are looking to strike it rich overnight, this ain't it. My main focus is simple, safe, predictable, and consistent 1% per week. That's over 50% per year. Next page down, slide down one more. Look at this. Investing your own money shouldn't be difficult. Stop making it more complicated than it needs to be. Under that, just gives it a little bit of more information. And I do have a morning trading group for people who are serious and actually want to enjoy me. Want to join me. All right, let's keep on going. Okay, name, SCHD, hell no. Okay, I already told you that SCHD does not fit. Okay, let's put it in just to show you. SCHD. Okay, monthly. There's no weeklies there at all. Monthlies just don't work. Do you do cash secured puts? Cool too. Yes, I do, but I don't teach them here. I only teach here one trading strategy. That is the covered call. And we are actually going to do a few as soon as you guys give me one decent stock to take a look at. Ram, how you doing? Paulo, how are you doing? Soccer Sniper. YMAX, dude, do you not listen, dude? YMAX, no weekly options, no thank you. WW, and it helps my brain understand that 1% a week is better. Okay, cool. Dallas, DX has a good dividend coming up. Dallas, you already said that. Okay, I understand it has a good dividend coming up. But what it doesn't have is the other half of the equation. Just because the dividend's halfway decent doesn't mean it fits. Okay, it means it has a monthly options, and monthly options just do not fit the category. Okay, Giroc, EC. I have no idea what that is, but let's take a look at it. EC. Total Energy, monthly. Didn't you listen, dude? Monthly, no. Okay, January, February, May, August. Those are months. Those aren't weeks. Okay, a weekly looks like this. Okay, 27 December, that's this Friday. 3 January, that's next Friday. 10 January, that's 3 Fridays away. 17 January, 4 Fridays away. 24 January, 5 Fridays away. 31 January, 6 Fridays away. There's a huge difference between a weekly option and a monthly option. Weekly options, yes. Monthly options, no. Okay? AT&T. All right. Lake Grad, AT&T. Here we go. AT&T, the high of the year is 24. That was just a couple of weeks ago. The bottom of the year was in April. That was around 17. A year ago, we're sitting around 1750. Look at the movement. Okay? Sideways, down, nice upward trend. Right here hits 24, pulls back. Now we're at 22. A little bit of bounce right there. I want to zoom in, take a closer look because everything looks good. But before we do that, before we zoom into the chart, what is it paying me? Okay, if I buy the stock, well, it's $22.76. The 23s are going for 7 cents a share. 7 cents a share is 0.3%. That's 1/3%. Numbers don't work. WWGE, I like General Electric. They're over 100 years old. Okay, let's do this. Slide to the left. Okay, the high of the year, 195. The bottom of the year, 100. She shoots up, goes sideways, peaks at the top here, a little bit of pullback, 160. Well, now we're at 168. 169, I can buy it from Monday. The 170 is going for 122 to 160. Not quite 1%. Close, but not quite. Okay, for it to be 1%, it would have to be $1.70. Okay, 169, the closest strike price is going to be the 170. Simple math. The 167.50, that will work right there. No, it won't, because I'm losing $2. Yeah, that won't work either. Nope, won't work. The numbers just don't work. It's not that difficult. The numbers just don't work with General Electric. How do you feel about Lucid? Isn't it LCID? Hold on, let's find Lucid. Wow, you guys got a lot of questions. Okay. Now, do me a favor, guys. All right? Now, trying to be honest here with you, I am going to answer every single question before I sign out. Do me a favor. Do not ask questions more than once. I do every single question. All right. How do I feel about Lucid? Isn't that LCID? LCID. Yeah, LCID. Okay. Interesting. So let's take a look. Here's the high right here, $4.40. Here's the bottom, just under 2. A year ago, we're at 360. Look at all the movement. Down, up, down, up, down, up, down. Now it's coming up again. Look at that. That's nice. Okay, before we move on any further, let's check the numbers. All right, I can buy it at $3 Monday morning, $3. The $3 call strike is going for 13. That is about 3.5%. I like 3.5%. Well, let's take a look. Before we go any further, let's jump on over to Yahoo Finance and put Lucid, LCID, and check out what the dividends actually are for Lucid. All right, going to Yahoo Finance. This is where I get my financial information. Go to historical data. Okay, here's historical data right here. Dividends only. Lucid has no dividends at all. There are no dividends in the selected time frame. Sorry, and for those of you guys that are new here and I don't know, just to let you know, you may not be able to see the small numbers here, but this whole screen here, the screen behind me, not me standing in front of it, but just the screen, is live on YouTube. So you can open up your big screen TV, pick yourself up, go on into the living room, plop yourself down on the couch or the easy chair, grab some popcorn, something to drink, and you can pull up this screen here on your big screen TV, and that way you can see all the small numbers. But users 96502129 blah blah blah. Why don't we just call you Peter? Peter, Lucid, no dividends, no thank you. Okay, Gear Rock, you already asked me about EC. I already said no. I asked very politely, only asked me a question once. Pedro, W-E-L, W-H-E-L, W-H-E-L, Salt Lake Potash Limited. Okay, can't find the stock symbol, which means no. Okay, Trey Guy, XDTE, XDTE. Okay, dude, monthlies don't work. When I say weekly options only, no. Dallas Guns, JP Morgan, that's more like it. JPM. Take a look. Ooh, check it out. The high of the year, 255. The bottom of the year, 165. Look at the movement. Nice to the upside, big gap here. Here's the high of the year. Pulls back. Now she's turning around. This is like a perfect time to buy. You hit the high, pulls back. Here's the bottom here, and so she moves back up again. I don't like buying as it's going up. I like it as it comes down, turns around, and goes back up. So before we go deeper into the chart, let's look at the numbers. What can I expect to get for it? The current price, $239. The 240s are going for $190, $110 to $190. That's not 1%. Okay, it's strange, but a lot of companies do. Trader Kev wants to take a look at Dow. Okay, D-O-W. D-O-O-W. She's dropping 40. Okay, here's the high of the year, 62. Here's the bottom, right around 38 and a half. Okay, she went up, down, sideways, down. Now she's bouncing right off of here. But look at the numbers. 40.29. Okay, the 40s are going for 54. We're losing 29 cents right off the top. So I'm walking away with not 1%. You guys haven't given me a decent stock yet. Now, none of these things you've given me are on my list, except for JP Morgan's on my list. It just didn't work this week. EC. Ted, Lucid Stock, we already looked at that. Okay, Pedro, Uber is not 20 years old. Hockey Sniper, YMAX, no dividends, no thank you. Thanks for checking. Do what works for you. I hold for longer time horizon for monthly. Good for me. Gabe, works for you? Cool. I have Lowe's stock. Ooh, now Lowe's is good. L-O-W. I buy Lowe's the first week of every quarter because Lowe's just works. Lowe's is over 100 years old. They have increased their dividends for more than 5 decades. That means they're consistently profitable. Well, let's take a look at the numbers. Okay, right around 287. The bottom is right here on 210. Okay, up, down, up, down, up, down, up, down. She's turning right here at 247. The 250s are going, what the fuck? 247.50, barely make your 1% there. let's take a look at Lowe's, just for the fun of it. All right. So, last 3 months, last 90 days. Look at the last 90 days. I'm looking for 5 things when I look at a chart. Number 1, where's the high? Number 2, where's the low? Number 3, where was it? Number 4, where is it right now? And number 5, take your little finger and go like this. Up, down, up, down, up, down. Okay, well, that's where it is. Right now, it's coming off of a high right here. And this is where we are, bouncing off that bottom. Last 30 days, which would be the 22nd. There we go. Here's your last 30 days. Important information. You can only have one 30-day high and one 30-day low. Right there. Okay. 30 days ago, we're 272. The high is 280. The bottom, 240. It goes from 280 to 240. That's a $40 drop. $40 drop on a $240 stock is right around, 16, 17% drop. It's a nice size drop. So what usually happens at that kind of a drop? Well, people like me and some of you in the audience say, wait a second, Lowe's is cheap. Let me jump in and buy some. So let's actually take a look at a trade for Lowe's. All right, now, like I said, I like the 247.50s. Let's get this out of the way. I'm going to change this from single to covered. Now, what is a covered call? A covered call is a simple, safe strategy. One of the easiest, safest strategies there are. I'm buying the stock. I'm selling it to someone else for basically the same price I paid for it, and I'm collecting about a 1% premium. Now, 1% per week is over 50% per year. Okay, so 247.5. The reason why I came up with 247.5, look at the last price on Friday. The last price that traded on Friday, 247.72. The closest strike price is going to be the 250. All right, sorry, the 247.50. All right, I'm just going to do one contract. That way you guys don't get scared by the big numbers. Market price. So as soon as the market opens on Monday, that's what it will be. Here's the trade. Buy one covered call of Lowe's. 27 December 24. That is the expiration date of the option. So if I'm buying it at this price, selling it to someone else at almost the same price I paid for it, picking up the premium, well, the premium is going to be $223 per contract. Okay, so let's take a look. The break even, right here, the break even is $245.26. Well, the stock is currently at $252. Well, at $245, anything over $245 is going to be a profit, right? So if my profit, so it says max profit right there, max profit is $223.50. That's $223.50 per contract. Now remember when I said I want simple, safe, predictable, and consistent. I know exactly what I'm making on this trade before I even do it. All right, now there's two other numbers you need to know. This number here, which is the cost of trade plus commissions. Now there's two numbers. One is if you have a cash account. Two is if you have a margin account. Now I always tell people, never do a margin account until you understand the risks involved with margin. Because you can make a lot of money, but you can also lose a lot of money if you're wrong. Okay? So, maximum profit, $223.50. It's going to cost me $24,000 in order to do that. Well, let's go get a calculator to find out exactly what kind of rate of return that is. So if my maximum profit is $223.50, okay, to find out my rate of return, I take my profit and I divide it by how much it cost me. Now, you might be a little bit of skittish on this one, but here's the thing. Anytime you buy something and resell it, you have to dish out some amount of money. It's like if you go to the corner store, 7-Eleven, Circle K, Quick Stop, Quick Mart, whatever the corner store is. buy a gallon of milk. You pay $3.50 for it. Well, the person who owns the store pays $3 for that gallon of milk, sells it to you for $3.50. His profit is 50 cents because you can't go buy it directly from him. Kind of the same thing. We're buying the stock, okay, and then we're selling it and we're making $2.23 per contract. What's one contract costing? It's costing $24,520. $24,526. Okay, now that comes to 0.9%, not quite 1%, 0.9. Okay, I probably wouldn't do this trade because I want 1% or more. But here's the thing: 0.9 multiplied by 52, because if you can do 0.9 per week, it comes to 47% per year. If I can do 0.9 every week, well, I want 1%, so I probably wouldn't do this one. But that's how we do it. Let's change this all up and see if we can find a better trade. Because I'm just going by what stocks you guys feed me. So what do we have next? YMAX, Uber, no. Lowe's, I like. Dredge of Realty. Okay. How are you doing? What should I do? Okay. User 965021294, whatever. Okay. If you really want my opinion, send me your number. I'll give you a buzz. Okay. Now, Dallas Guns. We already looked at J.P. Morgan. It was a no because the numbers weren't right. Trader Kev. We already looked at Dow. Wasn't quite right. Skating Pizza Man. Okay. I have no idea what that means. Okay. Garrock EC. We already looked at that one. Okay. We already looked at Lowe's. Okay. You guys all give me the same things. Trade, the website is The 10-Minute Trader. It's right up here in the bio. Okay, click on that. They'll bring you right to my website, The 10-Minute Trader. How is account number 1 and account number 2 same game while account number 2 is on margin? Wait a second. Hold on a second. Okay, account number 1, 84.65. No, this one's 84%. This one's only 80. Actually, this is supposed to be higher. That number's wrong. Okay, yeah, but this is margin. Yeah, it's probably a hell of a lot more than that. I haven't. If you come down, look. See, I haven't done the numbers on this one. Okay, so I have to finish that up. And as you can see, I only got to week 43. Week 43 was back in October. So I'm still missing November and December. So I'm still 2 months behind on updating the website. Why you look dividends coming? Pedro, dividends have a tendency to make the stock increase in value. So stocks move for 2 reasons and 2 reasons only. One is a known reason, reasons we know about that we can make plans for. Reason number 2 is an unknown reason. Well, what's an unknown reason? Well, an unknown reason could be a hurricane, a tornado, a blizzard, an act of nature, a death of an important person, a lawsuit that came out of nowhere. Certain events that you can't plan for, that is an unknown reason. A known reason, reason number 2, is something we can plan for. What are those? Earnings reports, dividends, stock splits, seasonality. Let me explain seasonality for a second. Winter, spring, summer, fall. Companies run differently in the spring than they do in the summer, and they do in the winter, and they do in the fall. Okay? Each time of year is different. Stocks react differently to different times. Like, why does Weight Watchers go up in the beginning of the year? Weight Watchers increases in value in the beginning of the year. Why does Hershey's stock go up in the first week of February? Why do oil stocks go up in March and April? Okay, why do consumer goods go up in the fourth quarter? Certain times a year create a certain demand for certain companies' products. It's just a fact of life. All right. So the reason why I'm looking at dividends is because stocks have a tendency to increase and price just before the dividend. Heather, I am a conservator for my mom. She only got 15,000 left and then will be broke. I need to help her. Heather, 15,000 is not a lot to help with. But if you want my opinion, okay, I can't give you an opinion here. I need to know more information. Get more information, drop me your number. I'll give you a call. We'll chat. This might not be the right thing for you. It's not right for everyone. It's slow. It's boring. It's repetitive. If you take a look at the stocks I did, okay, get out of there. Go all the way back to the very beginning of the year, okay, back to January. Okay, when I say it's repetitive, okay, look at the stocks. Week number 1, Ford, CVS, General Motors, Macy's. Now, I'm willing to bet almost every single one of you know whose Ford is, know CVS, General Motors, and Macy's. You probably heard of all 4 of them. Okay? Next one. Week number 2. Ford, Lowe's, Clorox, General Motors, Macy's. Well, some of them are similar. Week number 3. Macy's, Ford, Capital One Finance, General Motors, Clorox. Okay? Look here. Week number... What is this one? Week number 12. Ford, Nordstrom's, Kohl's, New York Credit Bank, USB, US Bank. Okay, week number 13, Paramount, JW, Nordstrom's, Kohl's, US Bank, JD Finance, Ford, and New York City, New York Credit Bank. 14. Macy's, Albemarle, JD, Paramount. Most of these companies you've heard of. Look at week right here. Ford, Marathon, Schlumberger, Intel, Walgreens, Bank of America, Chevron, and Macy's. You'll see I do the same stocks over and over and over again because they consistently pay me every week. Okay, Gabe, why not do ones with monthly options once a month and find 4 or 5 of them? All right, Gabe, apparently you weren't listening. When I say monthly numbers just don't work, let me give you an example. Okay? Let's bring up O Realty. Everybody loves O Realty for some strange reason. Okay. O Realty currently, as you can see, is at $52.79. Great. January, 26 days away. See that? This option is 26 days. That's 4 weeks. Great. Well, if it's 53.27, the 52.50s are paying $1.10, which is 2%. Why am I buying a stock, selling an option if it's only giving me 2%? 2% a month is 24% a year. And I've got to figure out right there. Okay? This is 30 days. Okay? 57.50 30 days ago. High was 58.60. Drops down to 51.60. Okay? You tell me where that's going to be in 4 weeks. I have a hard enough time trying to figure out where it's going to be in 5 days. You want me to figure out where it's going to be in 4 weeks? 30 days? It just doesn't work. 2%, 30 days? No, thank you. I'll take 1 or 2% every single week. The numbers just don't work with monthlies. Pedro, I always trade wheel strategy weekly and I'm lost. Yeah, Pedro, the wheel strategy has puts and calls. You do the put first and then you do the calls. It's a little confusing. When I say I created the trading strategy for my 9-year-old, it had to be simple, safe, predictable. Simple is not the wheel strategy, okay? Simple, you buy a stock. If you sell it at the exact same price you paid for it and you collect 1%, that's simple. Gabe, curious to hear more about the weekly option criteria. Can't you just find 4 monthlies per month? Okay, Gabe, I understand what you're saying. I really do. Okay? If you can't find 10 or 15 minutes a day to earn 50% or more on your money, I really can't help you. Monthlies, I don't know how many times I got to tell you, the numbers just don't work. Now, I've been telling you, I've been doing this for over 20 years. See the video I showed you right here? That's me. Look at the date, 12 years ago. Okay? I did this video 12 years ago with my daughter. In the background, you will see that is a whiteboard. And on that whiteboard, we had to hand write the stocks that paid on a monthly basis, on a weekly basis, every week, because they didn't have EX dividend calendars back then. We had to do everything long form. And there's a lot of, I have like over 700 or 800 videos years and years ago. Okay? So I've been doing it for a while. So when I say monthly options just don't work for me, if you like them, fine. I don't tell people what to buy. I don't tell people what to sell. I just tell you what I do. I'm not trying to convince anybody to do anything. I'm not trying to sell you anything. I'm just showing you what I do, and I even give you all the trades that I've done so far this year. Whoops, where are we going? Okay, these are all the trades I've done so far this year. It's not that difficult. Okay, Dell, Kohl's, MPW, Walgreens. Come on, you've heard of all those companies. Okay, this week here, what is this week? This is week 27, the first week of the third quarter. Okay, Kohl's, Dell, MPW, Walgreens. I made 3.3% that week. Every single one of my trades is available for you to see. So people ask me the question, why am I doing this? Well, this year coming up, I'm going to create a hedge fund and make it available for you people. Hold that thought. You want to come say hi? Sorry. Like I said, I'm in Vegas. We're doing a lot of things. My son's coming by. Say hi. Watch out for the wire. All right. Say hi.
Hello. Sushi place closes in half an hour.
Go ahead. You go without me. I'm going to be here for about an hour or two. I'll live. I will live without some sushi. It's like, what time is it?
10:30.
10:30. Well, go down there and order it now. I'll be down there about a half hour or so.
No, it closes in half an hour. When you
Yeah.
get down there, we'll be leaving because it'll be closed.
Well, take all the food, go outside of it, and sit there, and I'll be down there in a little bit. Sorry. All right. As I was saying, I am in Vegas. We had to meet with a couple of clients, so I usually have more cameras going at the same time. But let's get back to what I was saying. As I was saying, monthlies just don't work. Okay, name, what's your website or YouTube? Want to learn, but it's late and can't stick around to learn now. Okay, name, just send me a DM right here. Send me a DM, ask me for more information. Not a problem. You want to put your number on there, I will give you a call Monday. Tomorrow, I think at 5 o'clock in the morning, we're flying out to go back down to Florida. So don't know how much time I'll be available tomorrow. What do I think about GBP? What is GBP? GBP. Global spot, yeah, no options. See that? No options, no thank you. JPY, what the heck is JPY? JPY. Okay, can't find that symbol. Sorry. Night Shadows, what are the best dividend stocks for weekly dividends? Okay, Night Shadow, you weren't listening. There's no companies that pay weekly dividends. When it says dividend investing for weekly cash flow, I use weekly options off of dividend stocks. So you have dividend stocks, and the reason why I'm using dividend stocks, number one, they're consistent. Number two, they're safe. Number three, they consistently increase their dividends for more than 2 decades, which means they are past the adolescent stage of company. Most companies don't make it 3 to 5 years. You'll find a lot of stocks that pay nice dividends, but they're only 2, 3, 4, 5 years old. I'm sorry. This with my money, okay, I want a company that's consistently profitable. When I say consistently profitable, I'm talking 20 years of increased dividends. Now, I've already told you there's 9,797 different companies you can choose. Why you'd want to put your money into a company that's not consistently profitable is beyond me. Makes no sense. Trader Kev, we already looked at Dow. Dallas Guns, we already looked at JP Morgan. Can you please play a trade for the fun of it? Look at Macy's. Amy, I love Macy's. Let's do Macy's. Now, a lot of people say, well, look, Macy's is down. Yeah, it may be down, but I'm not holding it for the year. I'm holding it for 5 to 10 days. That's it. Macy's high of the year is 22. The bottom of the year is right around 14. Look at a year ago. We're at 19. Down, up, down, up, down. Okay, back up. Now she's down again. She's at 16.24 at this moment in time. Now I know Macy's pays over 1% a week, so let's do one because I trade Macy's almost every single week because it pays over 1% every single week. When I say this is boring as hell, this is repetitive, well, I'm trading Macy's every single week. I'm trading Kohl's, Walgreens, Bank of America, Ford, General Motors. These companies have been around for over 100 years. I consider them safe. I really can't picture a country or a society where there is no Coca-Cola, where there is no Pepsi, where there is no Bank of America, where there is no Ford, no General Motors. Okay, these companies have been around for decades, some of them for over 100 years. Matter of fact, Consolidated Edison, an electric company, has been a dividend company for over 200 years. All right, so let's keep on going. Macy's, let's take a look. Okay, a year ago, we were at 1988. Top of the year was at 2208. Bottom of the year in September, 1408. Well, look at the last 90 days. Remember, I'm looking for 5 things. The high, the low, where was it? Where is it? What's the direction? Up, down, up, down, up, down. Here we are right here, turning around. It's currently at 1639. Okay, if I buy it at 1639 on Monday, I want to sell the 1650s. I'm getting between 14 and 23%. That's over 1%. I like over 1%. I like Macy's. You cannot buy name recognition that Macy's has. So let's do one. Let's look at the 1650. Okay, let's get rid of that. Let's go here. Covered stock, the 1650 right there. Let's do just one contract. Okay, now, if you think I'm going too fast or if you don't understand anything, remember there's a few things to remember, but this here, what I'm showing you, without me standing in front of the screen, just the screen, is live on YouTube and it is recorded. You can go to my YouTube channel, The 10 Minute Trader. Okay, anytime you see a video from me, hey, this is James from Dividend Stock Talk, brought to you by The 10 Minute Trader. Okay, they're all recorded. You can watch them over and over again just to see how it goes. It's really pretty simple. Once I go to the covered call, okay, the 1650, because the stock right now is at 1639. So if I buy it at 1639, I'm going to sell it at 1650. I'm going to pick up a nice premium, and here's what it looks like. Here's the order. Okay, buy one covered call of Macy's 100s. That's the weekly. 27 December 24. That means the option is going to expire on the 27th. So if I buy the stock first thing Monday morning, I sell the option first thing Monday morning. Whoever buys it has the right to do whatever they want with that stock up until 3:59 p.m. on Friday afternoon, because after that, that option expires worthless. Just a little footnote here, 80% of all stock options expire worthless. Why would I want to buy? I don't want to buy. I want to sell. Why do I want to sell? Because 80% of the time, I'm going to make money. 20% of the time, I'm going to lose. It is what it is. I don't do anything unless I have the odds and probabilities in my favor. If the dividend's coming up in a week or two, I know the stock's going to go up in value. If the stock's going to go up in value, fine. I'm going to buy it at the market price on a Monday, sell the covered call, at 80% chance that I'm going to be right there, and if the stock is going up, I should be right almost all the time. Well, I've showed you my statistics. I make well over 1% every single week. I say 1% because it's easier. Okay, if I actually gave you the actual figures, people say, "Oh hell no, you can't do that." Well, I've been doing it for over 10 years, over 15 years. All right, so this is Macy's. Here's what it is. Calculator. Here we go. Get this out of here. Maximum profit, $42.50. $42.50. How much is it costing me? Well, this particular trade is costing me $1,608. That comes to a grand total of, you ready? 2.64% per week. I love Macy's. Macy's is my favorite stock this year. Last year it was Ford. This year it's Macy's. Okay, 2.64. The break even is 1607. So as long as the stock stays above 1607, I'm good. Now remember, stocks only go 3 directions: up, down, or flat, or sideways. Anyway, so the current price, 1639. Break even, 1607. Anything over 1607 and the stock is in an uptrend with a dividend coming up, everything works. Okay? Make sure, 5 rules. Uh-oh. Got to prove who I am. Here we go. Right, there we go. Okay. So, as I was saying, buy a good company, buy it at the right time, make sure the numbers work. And it's got to have weekly options. Out of the 9,797 companies, about 300 fit the criteria. It's always something to trade. Night Shadow. If you had $25,000, what would you invest? Would you get the maximum dividend, and roughly how much would it? Okay, Night Shadow. I don't look for maximum dividends. My main concern is consistency of profitability, safety, okay, predictability. These are what I'm looking for. I'm 60 years old. I'm retired. I've worked since 1973. I have an X amount of dollars. That X amount of dollars gets me 1% a week. That's me paying my bills comfortably. Okay, you want to chat? Drop me your number. I'll give you a call. Ooh, 007 MU. That's a good company. I like that one. Let's get out of there. Let's get out of there. Let's go back to here. And let's get back to where we started with MU, Micron. Okay, take a look at Micron. Okay, a year ago, we're at 82. We shoot up to 160. That's almost a 100% increase. Well, a 100% increase is very nice. It makes... Then had a big drop, back up, back down. Now she's going sideways, but look at the drop right here. Well, I'm kind of curious what happened there. Well, let's take a look. A year ago, Kyle, top left-hand corner. See it right there? Dividend Stock Talk. You click right there. They'll bring you to my website and the DM where you can send me a message if you want me to give you a buzz. A year ago, Micron's at 86. Sorry, what was that? 86.31. The bottom of the year was in mid-February at 78.80. She shoots up to the high at 157. That's almost a 100% increase within, what is that, 1, 2, 3, 4, 5, 6 months? 100% increase in 6 months. Okay, but from there, she goes from 158 all the way down to 84. That's almost a 50% decrease. All right, last 90 days. Now, when I'm looking at stocks, I'm looking at 4 different charts. The 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality chart. I'm going to show you that in a minute. Hold on a second. Let's take a look at the 90-day. 90 days, high, low, where was it, where is it, what's the direction, up, down, up, down, up, down, up, down. Look at this big gap. I love a big gap like that, especially with a company like this, because gaps have a tendency to fill. What does that mean? Well, she's here, which means as soon as she finds the bottom, it's going to turn around and go back up again, and that gap will usually fill. Usually, is it guaranteed? No. Death and taxes are the only guarantees we have in this life. Okay, Trader Kev, you already asked me about that. All right, so 007. I like Micron. However, I don't buy at a bottom. Okay, it's at a bottom right now. I wait for it to turn around and go back up. Okay, so as soon as she turns around, which means I'm looking for 2 days to the upside. All right, right now is the 30-day bottom, which means Monday it could be lower. It might not. I want 2 days to the upside before I jump in. That being said, let's go on to the next one. Trader Kev, dude, seriously, I told you, ask a question once. Okay, Dow, no. Misty, no dividends, no thank you. Mark, Halliburton, I like Halliburton. That's actually on my list. So is MU. MU is on my list too. Okay, so let's take a look at Halliburton. Here's your high, here's your low, where it was, where it is. Look at the movement. Up, down, up, down. She is at a current 30-day bottom. Okay, I like Halliburton. I actually have some Halliburton, but I wouldn't jump in and buy any more at the moment because she's still dropping. As soon as she finds the bottom, turns around, goes back up. Look, here's a bottom here. It turned around, went back up. Bottom here, turned around, went back up. Bottom here, well, Monday could be lower. It could be. Do we know? No, we don't. But I do like Halliburton. And I will be watching it Monday, Tuesday, Wednesday, because as soon as she turns around, look at the numbers. 26.29, the 26.50s. What the hell? 12 to 18? No. Should be at 26. Okay? See the last traded price? 25.97. Look at the bid. 25.95. The ask 26.29. Yeah, that's too big of a spread. It should be 26, not 26.50. So the 26s will give you 1%. Look at the numbers. Okay? The last trade, 25.97. Normally, it will open up very close. So if she opens up close at 26, well, I'm making 32 cents a share. 32 cents a share is over 1%. That's what I'm looking for. Over 1%. Halliburton. I know who Halliburton is. Remember rule number 1? Never buy something you don't understand. If I don't understand it, I won't do it. Okay? Nightshades. I'd love for you to look at AJG. Dude, I'm going to tell you right now, I never heard of it, and most likely, if I've never heard of it, it's going to be a no. Imagine that. Monthly optional stock? No. That's a no. The reason why it's a no, I told you before. Monthly options just don't work. Okay? Currently at 283. Okay, well, 283, the 280s are going for 8, the 290s are going for 370. That's over 1%. All right, but it's not 2%. And it's a monthly, which means I got to carry it for 4 weeks. Okay? So at 322, well, the 300s are going for, what was that, $1.30? Okay? The current price, 322. The 300s are going for $1.30. Yeah, that number doesn't work. And besides, you can't really trust the number because look at it. The last trade was 282. So hypothetically speaking, it should be 283 or 284 or 285. Okay, not 322. Okay, so the number's a little bit skewed. But no, I don't do monthlies. The numbers just don't work. Okay, AJG. Ooh, Lucille. Caterpillar. I love Caterpillar. CAT. Okay, 366. 367. Now that one works. Okay, look at the last traded price. The last traded price, 366. The closest strike price, 367.50, and it's going for $3.55 to $4. Well, that's over 1%. So Caterpillar is over 1%. Okay, so let's look at the chart. Here's the high, here's the low, here's where it was, here's where it is. Up, down, up, down, up, down, up, down. Well, what's going on right here? I want to take a look at the last 30 days, but we've got to go through the whole routine. Okay? The year, high, low, where was it, where is it going? Okay, 90 days. Now the reason why I'm looking at a 90-day chart, because I want to see the movement, the predictability. Is there a pattern? Well, there is. Up, down, up, down, up, down. Well, Caterpillar is looking for a new bottom. So Look at the last 30 days. Okay, here's your last 30 days. 30-day high, 30-day bottom. Not quite, because Monday it could go lower. So Lucille, I do like Caterpillar. The numbers do work, but the chart is telling me to wait for it to turn around. Okay, so as she's dropping, remember, you can't get any lower than the low. Well, currently, Friday was the low. Monday, it could be lower, but we won't know until Monday. So Caterpillar is something I would write down and I would follow just to see what it does. All right. Cool Moji. Royal Caribbean, huh? RCL. Interesting. Ooh, I like the numbers. Take a look. Here's the high. Here's the low. Here's where it was. Here's where it is. Okay. Nice upward trend. Pulls back. Now, the reason why I like the pullback, okay, the high, I don't buy at the high of the year. Okay. Profit taking is done. Now she's turning around. Currently at 241. The 240 is going for 224 to 296. It should be 239. Okay, well, the 239 is not available, so the 240 is 296. That's over 1%. So let's take a look. A year ago, we opened up at 126.72. The bottom, 112.78, and that was back in mid-February. Look at the last 90 days. The last 90 days. Look at that nice movement to the upside. Here's the high. It pulls back. Here's your bottom. It's starting to turn. You can actually see it's starting to turn to go back up. Well, that's what I'm looking for. Last 30 days, right there. Okay? The 30-day chart gives you a better idea of what we're looking at. Look, 30 days ago, we're at 242. She jumps up to 257.50, drops down, and now she's turning around and go back up again. That's what I'm looking for. And then check the numbers. The 240s, right there, going from 224 to 296. Right now it's at 240. That is over 1%. That's what I'm looking for. Royal Caribbean, I know who they are. I know that they're a cruise liner. I've been on them before. So, Cool Moji, I like Royal Caribbean. I do. So that one actually works. Amen. Tesla, did you hear the part where I said no dividends, no thank you? Tesla does not have dividends. They do not share their profits. Cool Moji, AT&T. Yeah, AT&T is not quite there. Look what, here's the high right there. 22.76 to 23 is going for 7 cents. AT&T is over 100 years old. They don't need our business. The premiums usually aren't 1%. I do look at them every week, but it just doesn't work. Heather, Coca-Cola. Nice. Coca-Cola's been in business for over 100 years. Okay, over 140 years, as a matter of fact. Okay, a year ago, we're at, 59? Our bottom's at 58. That was in April. She shoots up to 73, and that was in September. Pulls back to 62. Up, down, up, down. I want to see this area right here, because this is the last 30 days. Okay. And here we go, last 90 days. Here's your last 90 days. Here's the high, here's the low. Look at the movement. Up, down, down. Now she's going sideways. She's currently at 62.60. The 63s, 26 to 37. That's 0.5%. 0.5% every week is around 26% per year. If you're okay with 26% per year. That's what I'm looking for. I'm looking for 50%. So. Okay, Kumoji, DEBT, never heard of it. DEBT. Delaware Energy, no options, no thank you. Pedro, Intel, ooh, I actually have some Intel. Pedro, INTC. Okay, take a look at Intel. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. down, sideways, down, sideways, down, sideways. Now we're at 1952. The 1950s are going for 42. 42 cents a share is over 2%. So a couple questions you need to ask yourself. Simple questions. Number one, does it make sense? Number two, do I like Intel? Number three, do I like Intel at this current price? And am I willing to hold on to it until it hits my target, knowing that they go down, they go up, they go down, they go up. Now, if you are expecting a stock to come to your house and walk your dog, mow the lawn, do the dishes, take out the trash, they don't do that. They go up, they go down. That's it. They don't wash the car. They don't vacuum the rugs. They go up, they go down. They do not do anything else. Okay? Up, down, up, down, up, down, up, down, up, down, up, down, up. That's all they do. Do not get emotionally attached to a stock. They go up, they go down. Okay, Coolmoji, PE down. Okay, Coolmoji, if the price per earnings is down, which would mean it would affect the dividend. If the dividend is not consistently increasing, why am I looking at the PE ratio? Think about it. If the dividend is down, I'm looking for 2 decades of increased dividends. If the dividend is down, the PE ratio will be down. Then it won't be on my list. It's not something I look at. It's nothing more than a waste of my time. Pedro, PLTR, no dividends, no thank you. Simple. No dividends, no thank you. All right, a 007, MY. MY? What the heck is that? MY. Montego Resources. No option. Sorry. Heather, Johnson & Johnson. Okay, I'm going to tell you right now. Johnson & Johnson, huge company. Doesn't need our business. The premiums are horrible. Usually 146. The 146s are going for 30 cents to 68 cents. I don't even need to look at the chart. I've been doing this long enough to know that even though Johnson & Johnson is a great company, the numbers just don't work. Usually. Never work. Usually. But once in a while. I mean, I'll take a look. But once in a while they work. Most of the time they don't. 007, we already looked at Micron. Gabe, Gabe, good pick. Starbucks, I like Starbucks. Let's take a look at that. SBUX. Starbucks is on my list. Unfortunately, okay, Starbucks is on 2 lists of mine. 1, I like the stock. I like to buy it. Second list, waiting for a new bottom. See it? Here's your 30-day high. Here's currently right now. So I'm going to be watching it Monday, Tuesday, Wednesday. Okay, Monday, Tuesday, Wednesday, hypothetically, she should turn around and go back up. Heather, Procter & Gamble. Another dividend king. Okay, so actually has 1 day to the upside already, so let's take a look at the whole picture. 168 to 167.50s. Okay. Might be able to do it to 167.50s. All right, let's go back to the beginning. Okay, Procter & Gamble. Here's the high, 180. Here's the low, 146. Up, down, up, down, up, down, up, down. What's happening right here? Okay, last 30 days. The last 30 days is most important to me. I only want to hold for 5 days. Buy it on Monday, be out on Friday. Collect my 1%, happy as a clam. That's what I'm looking for. Simple, safe, predictable, consistent. That's what I'm looking for. Procter & Gamble, look at the last 90 days. Okay, when I look at the 90-day chart, I'm looking for a pattern, looking for 5 things. The high, the low, where was it, where is it? Where is it going? Down, up, down, up, down. Well, yesterday, Friday, and Thursday. Thursday's the bottom. Friday's 1 day to the upside. I want 2 days to the upside before I jump in. Okay, last 30 days right there. Here's your last 30 days. Here's your high. Thursday was the bottom. Friday was higher. That's 1 day to the upside. I want 2. So if Monday's a higher day, I'm going to jump in. But is the number right? If I'm buying it at 168.19, well, the 167.50s are going for 165 to 266. So you can get your 1% there. Now, I haven't showed it to you yet, but let's take a look at the seasonality. Seasonality, okay, is, let's open it up all the way, get a better idea of what seasonality is. This chart here, all the way to the left is January 1st. All the way to the right is December 31st. That's a whole year. The blue line is the movement that the stock made this year. Up, down, up, down, up, down. The red line is 10 years of data. Average movement over a 10-year period. Remember I told you about seasonality? Look at the fourth quarter. Okay? First quarter, second quarter, third quarter, fourth quarter. Look at this nice upward trend for the fourth quarter. So if you just bought Johnson & Johnson in the fourth quarter, the beginning of the fourth quarter, and rode it up to the end of the year, you should hypothetically do well. Now I say hypothetically because this is history. Now, just because it did it 10 years in a row, does it mean it's guaranteed to do it for year 11? No. But odds and probabilities, that means if you take a left going to work every single day when you come out of the driveway, most of the time you go out, you take a left, go out, take a left, go out, take a left, 10 times in a row, more than likely the 11th time you're going to do the exact same thing. People are creatures of habit. If it goes up every year in the fourth quarter, more than likely it'll go up in the fourth quarter. All right. That being said, let's go back to where we were. I love the seasonality chart. I remember when they first came out with it. Okay, now I've been trading long enough where they didn't have seasonality. They didn't have EX dividend dates, EX dividend calendars. Okay, I was trading when the options trade, when the trades were $250 per trade. So every time I traded $250 just as commission. It's come a long way since then. I've seen it go from $250, then they dropped it to $125, then they dropped it to $69, then they dropped it to $35, then they dropped it to $12, then they dropped it to $6. Well, now it's free. Now you can trade for free, but you get, well, not 100% free. You got to pay exchange fees. What was it? 50 cents, 25 cents sometimes. All right, Kumoji, Costco. Now, Costco is on my list, but I don't trade it. The reason why I don't trade it, you're going to find this humorous. The reason I don't trade Costco is it's out of my price range. It could be a perfect trade. It could be a perfect setup. But at $960 a share, it's out of my price range. Dallas Guns, you're absolutely correct. JP Morgan does have weekly options. JP Morgan is on my list, but we take a look at JP Morgan already. Okay? JP Morgan, everything looks good, but look at the numbers, the 237.50s. Okay, barely making it. Because going from 237.91 to 239. The numbers just aren't doing it. See? 239. If I'm buying it at 239, well, I want to sell the 239s to 240s. It's going for $1.10. That's 0.5%. 0.5% is only 26% per year. If you're okay with that. Okay, Heather, Chevron, CVX. Unfortunately, all the oil stocks are looking the exact same. Okay, last 3 weeks, down, looking for a bottom. ExxonMobil, Chevron, British Petroleum, ConocoPhillips, Hess, almost every single oil stock is down, looking for the bottom. As soon as it finds the bottom, I'll jump in. 143, the 143s are going from 108 to 126. Not quite your 1%, but it's still there. Pedro, AI, doesn't have 20 years of increased dividends. Not quite there. Wow, you guys have a lot of questions. Ooh, Kohl's. I want to take a look at Kohl's. Hold on. EPD, no. Wow. Holy shit. Sorry. I'm trying to go through all the questions. Right, Coca-Cola, there we go. SPX. All right, Black Wall Street, SPX? No. SPX. S&P 500 Index. Okay? I don't know what gives you the impression. Do you think I can afford a $5,900 stock? No. Sorry, dude. However much money you think I have, I don't. Okay? So, no. SPX is out of my price range. What do I think about Siri? Ooh, I like Siri. Let's take a look at the numbers. Ooh, nice. Okay, let's take a look at the numbers for Siri's. Okay, dude, bro, I love it when people say this is a recording. How can I be reading this is a recording if it's a recording? Okay? I'm looking at the questions you're asking. I am going to answer every single question before I'm done. I am. Okay? I told you I'm going to do that. That's what I'm going to do. However, ask me the question once. I will get to it. All right? I may not get to it as soon as you type it in because there's over 100. There was what, 230 people here? People asking all these questions. I like to answer each and every individual question. Okay? I might not get to your question as soon as you want me to, but I will get to it before I am done. And no, this is not a recording. I said this is being recorded. So tomorrow, because right now it is 2:01. Oh, I'm from Florida, so it's 2:01 a.m. in Florida, but it's actually over 11 o'clock here in Vegas. So I'm only here in Vegas one more night. Tomorrow I'll be broadcasting from my home in St. Petersburg, but at this moment in time, it is 11:01 p.m. on the 21st. All right, let's keep going. Siri, here's the high, 55. Here's the bottom, right around 20. It's just bouncing up the bottom right now. Down, up, down, up, down. Right now, 23.20. The 23s are going for 52 cents. That's over 2%. Well, let's take a look at Siri. Is it the right time to buy it? Well, last year at this time, it was at 56.98. Okay. Last 90 days, look at the movement. Up, down, up, down. It's bouncing right here. Okay. Let's look at the last 30. Because the last 30 gives me a good idea of where it's going next. Okay. Here's your last 30 days. 30 days ago, 27, shoots up to 29, drops down to 21. That's a $9 drop. A $9 drop on a $29 stock is a 30% drop. Go by the numbers. Numbers are awesome because numbers don't lie. From 29 to 21, okay, it's an $8 drop. $8 drop on a $29 stock is about 30% drop. Okay? Okay, but if I can buy it right now, 23.20, the 23s are going for 52, the 23.50s are going for 25. I can get my percentage right there. But here's the thing. Do you like Siri? Do I like Siri? I like Siri. What does Siri usually do this time of year? Well, this time of year, Siri right here we go, right here. So the last 2 weeks of the year, flat. Doesn't do very much. But what does it do at the beginning of the year? Let's go all the way back to the beginning. Okay, so the first couple of weeks of the year, okay, she's basically going to go down. So, Trapper, okay, now, from now to the end of the year, she's just going to go sideways. It's about 2 weeks. But after that, she's going to start going down. Now, that's historical performance. That's what it did last year and the year before and the year before. Does it mean it's going to do it again? No, it doesn't mean that at all. Okay, Heather, 3M. I like 3M. Oh, wrong one. Wrong button. Wrong button. Here we go, right there. Where we go. All right. 3M. Interesting. Okay, 130, the 130s. No. Damn it. Look at the numbers. 130, the 130s going for 83 to 127. Not quite 1%. Cool Moji, WWW. Wayfair, no, hasn't been in business for 20 years. Heather, Realty, yeah. It's a monthly, no. Are you from the USA? Yes, I am. Dude, bro, this is not a recording. Hey, Scott, thanks. MPWR. What the heck is MPWR? MPWR. Monthly. Monthly doesn't work. No, thank you. What are we looking at? Futures? No. Cody, we're looking at dividend stocks and stock options. Pedro, what are you do if the stock falls more than 1% a week? All right, Pedro, do you remember rule number 1? Rule number 1 says do not buy anything you do not understand, which means if you buy a stock, you are under the understanding that they go up and they go down. If you're not ready for a stock to go down, do not play this game because they don't do anything else but go up, down, up, down, up, down, up, down, up, down. That's all they do. They go up, they go down. If you're not ready to play the game where the stocks go up and the stocks go down, don't play. Okay? The longest I've ever held anything was 9 months. That was Kimberly Clark last year. I bought it, she dropped. And as she dropped, I collected 3 dividends and 30, I think it was like 33 or 35 premiums. This is a monthly, but every single week I grabbed a premium and I collected 3 dividends. Most people buy a stock and hold for decades and only collect a dividend once every 90 days. I'm asking you to change your way of thinking. Buy a good quality stock, sell a covered call, and collect a premium every single week. All right, let's go to the next one. I'm going to answer all these questions before I'm done with the day. Kevin Jordan, how are you tonight? TJX. Ooh, cool beans. 122, the 124s, 124s. No, number's not working. 122, the 122 is... Okay, the last trade, 122. The 122s are going for 81 cents to 115. Not quite 1%. Okay, Bandit CJR. Okay, Harley Davidson, HOG. Okay. Harley Davidson made a new bottom on Thursday. Friday was an up day. It's currently at 31. The 31 is going for 1%. It's actually doing 1%. Harley Davidson. Let's take a look. A year ago, Harley Davidson was at 36. She jumps up to the high of the year, 44. That was in mid-March. From there, the last 90 days. Take a look at the last 90 days. Okay, 39, drops, up, down, up, down. Here's the bottom right here. Let's take a look at the last 30 days, because the last 30 days gives me a good idea of where the stock is going to go in the next 5 days. Well, that's what I want, the next 5 days. I want to be in on Monday, and I want to be out on Friday. All right, 22, right there. Here's 30 days ago. 30 days ago, here's a 30-day high at 36. Bottom was Thursday. Friday was higher. I like 2 days to the upside. If Friday is higher at 30.75, well, the 31 is going from 35 to 45. That's over 1%. So let's do a practice one. Harley Davidson, why not? Let's get rid of this. Let's change this to a covered call. Now remember, a covered call is a simple, safe, predictable strategy. You're buying a stock, you're selling it the rights, not the obligation. the right for someone to buy it from you at the exact same price. Okay? So, if I buy Harley Davidson at 131.35, the 132's right there, buy that one. I just want to do one, so you understand one, the profit on one. If you can do 2, 3, 4, 8, 12, 39, whatever. Okay? Buy one covered call, Harley Davidson 100s. That's the weeklies. 27 December 24, that means the option expires on Friday. If someone's going to buy it from you or do whatever they want to do it, they have to do it by 3:59 p.m. Friday afternoon. Because at 4 o'clock, market closes, you can't do anything. 27 December 24, that's this coming Friday. The $32 call option on Harley Davidson at the market to open. Here's my break even. Here's the profit. That's what's going to cost to do the trade. What's the rate of return? Well, calculator. Clear that. 137.50 divided by 30. So $3,063. Holy shit. 4.48%? Is that right? $137.50 divided by 4.48%. If you like Harley Davidson. If you don't like Harley Davidson, don't do it. Okay. And do you like Harley Davidson at this price? That's another question. Important question. Question number 1. Does it make sense? Question number 2. Do I like Harley Davidson? Do I like Harley Davidson at this price? Am I willing to buy Harley Davidson and hold on to it for as long as it takes until it hits my target? I can do a covered call every single Friday. Hold on, let's get out of this. Back to single. Let's get rid of that. Let's get this over to here. Okay, let's go this way just a tiny bit. Okay, so take a look. 27 December, that's this Friday. 3 January, that's next Friday. 10 January, that's 3 Fridays away. 17 January, that's 4 Fridays away, so on and so forth. Every Friday I can do it. 31, 35, the 31s are going for 35, this 31's going for 55, this 31's going for 75, this 31's going for $1. The longer I go out, the more money I get. Okay, Jeremy, Energy Transfer. It fits the category in everything but one. Let's pull up Energy Transfer and I'll explain to you why I don't like it. I used to do it and then I got my ass burned on it and I just don't do it anymore. Okay, Energy Transfer. Energy Transfer. Okay, the chart looks fine. Here's your high, here's your low. Look at the movement, up, down. It's turning sideways. 1886 to 19 is going for 10 cents to 14 cents. That's not the reason I don't like it. One strike out of the money, 10 cents. That's 0.5%. 2 strikes out of the money, 3 cents. 3 strikes out of the money, you're basically doing nothing. Yeah, the premiums just don't work. I like the stock. It makes nice movement. But if you're wrong, the numbers don't work. And there are too many other companies that do work, that do give a better performance. All right. We're at 11:13. I usually quit at 11:30. Let's keep going and taking a look at some of the questions. Okay, you're conscious. FedEx. I love FedEx. FDX. Okay, 275. Okay, 277s to 277s go for 280. That's well over 1%. I like 1%. It's a simple math. If the stock is 277, well, 277. 1% is 277. Okay, so last year we're at 247. We bottomed out at 234. That was back in February. Topped out at 314. That was in July. down, up. Look at the last 30 days. Okay, look at the movement. Okay, 30 days ago, we're at 305. Bottomed out at 270. Okay. I would wait, because this is a new bottom right here. I would wait and see what happens Monday and Tuesday with FedEx. Sorry. Darkonis, Affirm. I don't know what the ticker symbol is for that. Okay, Jergy Shopify is not 20 years old. Tour Life Holdings, ATAT. James Swanson, how are you today? ATAT. No. Okay, ATAT, monthly. I don't do monthlies, the numbers just don't work. Angie, you find it interesting? Why, thank you, Miss Angie. Darius, SMX. What is SMX? Never a good sign if I have to ask, what is it? Oh, no options? No, thank you. Can you put me through? Angie, I'm not quite sure. What do you mean, can I put you through? Can you put me through to what? How about Archer Aviation? Not 20 years old, dude. Sorry. Shopify? Sorry, Georgie. Shopify is not 20 years old. Gabe, we already looked at Starbucks. James, ATAT? No. The numbers just don't work. EPD. All right, Lucille. EPD. No dividends? No, thank you. Gestrial bins. It gives you... Yeah, I seriously doubt that one. Heather. Monthly is too hard to determine when the lows come. Weeklies are more predictable. You're absolutely correct, Heather. Thank you for that. WW, you are a real one. FR. I have no idea what FR means. Okay, sorry. I'm old school. Seriously, old school. I write shit down in a pad of paper. I have a book, a pad of paper. I write shit down. I'm that old. I don't trust computers. That looks Russian. All your options will be stolen eventually. I'm not 100%. Not 100% sure what you mean by all my options will be stolen eventually. WW, get him sushi. Yeah, I told him I would. Tell us about your hedge fund. Heather, I am working on assembling a board of directors for the hedge fund. Okay, I'm pretty good at what I do. Seriously. I make a consistent 1% per week. I've been doing it for over 15 years. So I decided, why not share it with the common man? Okay, hedge funds are usually for people with a lot of money, but I want to bring it down a little notch and make it easy for the average guy. Okay, I think we're going to start out and guarantee 20% per year to start out with, and then we'll go from there and see what the dividends look like after a while. How do you select which stocks you work on? Ooh, good question. You ready? I hope you got a pencil, piece of paper handy. Crayon, marker, mascara, lipstick, whatever you want to write with. Dividend Kings. 54 companies that have consistently increased their dividends to their shareholders for more than 5 decades. Dividend Aristocrats, Dividend Champions, 25 years. 67 companies that have consistently increased for 25 years. The Dividend Champions, 150 companies that have consistently increased their dividends to the shareholders for 25 years. Dividend Contenders, 10 to 24 years of increased dividends. VS, does he see anything with his left eye? No, I don't. I'm blind in my left eye. But it's a good observation. Okay, when I was 17, I got a nail stuck in my eye. So it's there, but it doesn't work. Tim Olson. Hi, more for information possible. Tim, seriously, ask me a simple question. I'll give you a simple answer. Ooh, late grad Coles. All right, take a quick look at Coles. I do have some Coles. Okay, so here we are with Coles. The high of the year right here, 29. The low of the year right down here at 14. Okay, she went sideways for a bit, dropped. What's happening here? Don't know. Let's take a look. Currently 14.22. The 14.50s are going from 15 to 23. That's over 1%. That's what I'm looking for. Simple, safe, predictable, consistent, 1% or more. Kohl's is paying it. Well, let's take a look at the stock, see what it says. Okay, a year ago, we're at 27.73. Okay, the high of the year was back at the end of March. Okay, that was 29? Yeah, 29.74. Well, the last 90 days. Why do I want to look at the last 90 days? The last 90 days tells me or shows me what kind of patterns there are. Well, look. Down, up, down, up, down, up, down. Big gap. Up, down, and just sideways right here. The bottom is right there. It looks like 3 days on the bottom. So what usually happens down here? Well, last 30 days, right there. Okay, here's your last 30 days. Here's your high, here's your low. What usually happens? Well, once you get to a low, you got people like me saying, holy shit, Kohl's is at this price, I'm going to jump in and buy some. But I want 2 days to the upside. If the bottom is here at 14, the 14s are going for 36. Okay, the 1450s are going for 15. They're both over 1%. That's what I'm looking for. Let's do one real quick. Let's get out of here. Let's jump over to here. Covered call. The 14s right there. One contract. This way, you know, some people freak out when I do 10 or 20 contracts because the numbers just get, you know, big. So one contract. Okay, the break even, 13.70. As 13.79 is the break even. The stock is currently at 14.22. Currently 14.22. 13.79 is break even. Maximum profit on this one is only $21. Okay, not huge, but profit is profit no matter which way you look at it. So let's do the numbers. Clear this. If the profit right there, max profit. I love a covered call because it tells me what I'm going to profit before I even do it. Now, stocks go 3 different directions. They go up, they go down, or they go sideways. Well, currently at 14.22, if the stock goes down, well, it can go down to 13.79, and I'm still making a profit. That's the break even. So anything over 13.79 is going to be a profit. Okay, so the max profit is $21. I'm going to divide that by how much does it cost for me to do one contract. Well, that's $1,379. Well, what does that equal? It equals 1.52%. That's 1.5%. 1.5% a week is over 75% a year. Well, you just take that number and you multiply it by 52 because there's 52 weeks in a year. Okay, all right, I was wrong. It's 79%. 79%, that's a lovely number. I could live very comfortably on 79. I mean, I live very comfortably on 50%, but 79, that's even better. Let's go here, and let's go there. Let's get out of here, and we're back where we started again. All right, it's 11:22. I'm going to try to answer all the questions. Arbor Realty. Danny, you got to give me the stock symbol. Okay, Arbor Realty doesn't sound like something I've done. Tino, how are you today? Bizman, how are you? William Russell, help. Don Price. So you pay taxes on the win, but can't write off your losses after $3,000. Okay, Don Price, why don't you listen closely? Okay, it is your responsibility to pay the least amount of taxes legally possible. If I held my account in my personal name, yes, I would be obligated to pay taxes. However, if I hold my trading account in a trust, a corporation, or what's that other one I'm thinking of? A trust, a corporation, or a foundation, I don't have to pay taxes. If you're worried about taxes, you need to talk to a tax strategist or a tax planner. And the very first question you want to ask them, how much taxes do you pay? Because if you're talking to someone who does your taxes and they pay taxes, that's not someone you want to talk to. You want to talk to someone who doesn't pay taxes legally. Okay? Elijah, Tesla, no. No dividends, no thank you. Jose Amalde, Don Price, KKK, okay, whatever. Don Price, why you trade in a Roth IRA? Well, you could trade in a Roth IRA and your taxes, what do you call it? Postponed. Okay, Elijah, let's talk Tesla. How about we talk no Tesla? No dividends, no thank you. Simple. No dividends, no thank you. Dima, XRP is not a dividend stock. Helephant, H-E-L-P. H-E-L-P. Whoops, let's go right up to here. H-E-L-P. Sorry, H-E-L-P, no options, no thank you. Dima, XRP, no. Batman, IVM. IVM. Can't find that symbol, no. Diva, no. Okay, Diva, you can ask me all you want. XRP is not a dividend stock. My name's Travis. I've made $50,000 this year on monthly and ODT options. Dude's a boomer. Well, I'm terribly sorry you feel that way. Danny, good evening. Do you have anything on CCJ? CCJ. Okay. Chemico Corporation, 5244. Ooh, check it out. 5244. The 53s are going for 75 to 84. That's well over 1%. Okay? So, let's take a look. A year ago, we're at 50. The bottom's at 35 and a half. The top's at 63. Right now, we're at 52. Okay, well, let's take a closer look. Okay, a year ago, 43.70. The bottom, 35.49. That was the beginning of August. Last 90 days. Look at the movement for the last 90 days. Up, down, up, down. We're currently right here. Look what's happening the past couple of days, right there. I want to zoom in, take a closer look. Right there, here we go. This is the last 30 days. Up, down, looking for a new bottom. Okay, it's one of those stocks. I'm just going to look at it and wait for it to find the bottom. What program do you use on the left and right? Okay, Jim Bott. This is not a software. This is a trading platform. It's offered through Charles Schwab. Now, I don't make any money by suggesting it. I have been using it for 20 years. I've been using it when the programmer, Tom Sosnos, created it. He sold it to TD Ameritrade. TD Ameritrade got bought out by Charles Schwab, but they kept Thinkorswim, the trading platform, because there's a lot of people that like it and a lot of people that use it. Okay, so it's not a program, it's actually a trading platform. Amy, hi, I'm using TOS. I have a different strike price. Is it because I am using paper? No. Okay, the strike prices are right here. Okay? Right there. I can look at 10 of them. I can look at 4 of them. Or I can look at all of them. Okay? All depends what you have your settings at. Now, Amy, you're in my morning trading group. So when I get back to Sarasota, I'm going to give you a call, and you and I are going to do some more trading on the Zoom call. What numbers are you looking at on the right? These numbers over here on the right. Now, Jim, you're new here. This here, the screen you're looking at, is live on YouTube, and it is being recorded. I'm live right now, but it is being recorded, so you can get a good look at these numbers. Now, the numbers here are the call options. The numbers here are the put options. Those are stock options. Gives people the right to do interesting, fun things with their stocks. Okay, so let's go. Keep on going. SIN. What about Kava? No dividends, no thank you. Sorry, dude. Chris Dollar, how are you today? Are you trading stocks? I am trading stocks and stock options. So that would be a yes. Chris, how are you doing? Lauren Marie. What a lovely name. Lauren Marie, good evening. Let's keep on keeping on. Elijah's Hum. Cool. Wiser with age. Absolutely right. You're spot on with how to invest. Wiser with age. Thank you. Christola, the price falls down. Yeah. Price always goes down. And then it goes up. Then it goes down. And then it goes up. That's all it does. Dude, if you're expecting a stock to come to your house and take the dog for a walk, won't happen. If you want to change the towers, won't happen. Stocks go up, stocks go down. That's all they do. The idea is to find a good company. Do you sell in the money or out the money? Okay, Pedro, good question, really. But it all depends on the numbers. Okay? Is it a good time to buy it? Do the numbers work? Is it a stock that I know and I want to hold on to? Those are important questions. Okay? Thoughts on John Deere? Jacob, John Deere, gotta love it. DE. However, we're past 11:30. I'm usually done at 11:30. So let me just finish up the questions and then we'll be done. John Deere. Okay? A year ago, 396. We bottomed out in August at 339. Topped out at 470 exactly a month ago. But look what happened in the last month. Okay? Up, here's the top right there, 470. Bottom was on Thursday. Friday was an up day. Friday being an update, I'm looking for one more update on John Deere. John Deere 443 to 440. No, wait. 433. The numbers just don't work. Sorry, numbers don't work with John Deere. AUMC. David, what is AUMC? Never heard of it. AUMC. No options, dude. Sorry. And it's not, dude. Seriously? Okay, Pedro. Hershey. Gotta love Hershey. All right, it's past 11:30. I'm just going to answer the questions. I'm not going to look at any more stocks. Okay, I got a 5 a.m. Morning call to jump on the plane to go 5 hours. Yeah, so no more. Kava hasn't been in business long enough. Pedro, Hershey, I love Hershey. I really do. Hershey has gone up in the beginning of February every single year for about 12 or 14 years. Woodside Energy, TT. Sorry, I never heard of them. Okay, but I'm getting ready to call it a night. Chris Dahl, you're absolutely right. Is in bearish. Chris, you're absolutely right. Writer on the Edge. Is this a recording? No. Writer on the Edge, this is not a recording. Where are you getting these stock calls? This is Think or Swim being offered by Charles Schwab. Okay? Writer on the Edge, he's not responding to me. Could be a recording. Send, I'm not even going to respond to something like that. I told you it's live. I'm reading your questions, and I'm telling you I can't do the questions as soon as you write them. It takes me a while to get to them. Okay, Hershey, we already did. Energy, we already did. Zen Bearish, I already did that. Yep. Sin, I noticed that. Sin, is it still interesting stuff? I'm glad you like it. What's my name? My name's James. Says like every single dividend, every single video I do. Hey everyone, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader. I tell you my name right at the front. CRWD, crowdfunding? No, that hasn't been around for 20 years. GME, GameStop? No. 230, well, there was 230 people an hour ago. Recording or not, your info is valuable, wiser than age, thank you. Go on, don't explain too much. Dennis, thank you for that. Lovey, even if it is a recording, I'm still learning. I'm glad you like it. I don't know why people think it's a recording. I bought Verizon. I like Verizon. Great job. I done 90 minutes. Cool. BRKB. David Dunn, Berkshire Hathaway, no dividends. Sorry. You're primarily selling calls. DP, you're absolutely right. Dima DM, cool beans. Laurie reports, how are you doing? Diego Gold. Okay, Diego, I'm not quite sure what you mean by and why. How can I find you in YouTube? Pedro, Pay attention closely. You ready, Pedro? In the top left corner, where it says my little picture, okay, right there, my little picture, and it says Dividend Stock Talk, you click on that, and that will bring you to the 10-minute trader, and that will bring you to YouTube. Thanks. Late here. Good night. Safe trip. Amy, yep. I'll talk to you later. How can I follow your tortardes? I trust you. Pedro, thank you. Pedro, I'm on every single night, 9 p.m. Eastern Standard Time, okay? I'm here in Vegas. I had a meet up with a couple of clients. It's 11:30 p.m. Western or Mountain Time. Is that right? Mountain? Anyway, but it's 2:30 a.m. in Florida where I live. Okay. How can I follow you? I already said that. Late here. Blah, blah, blah. Okay. Okay. Where was I? And why? All right. Nandi, I just moved to EU and would like to start trading. How can I start? Well, if you're in the EU, you're going to have to somehow be able to trade in the US. My personal opinion would be a VPN, a virtual private network. That way you can sign in anywhere. Dastul, Asimo. Okay, Rivian, no, they have not been around for 20. They have not been around for 20 years. I want companies that are consistently profitable for 20 years or more. Plain and simple, 20 years or more. All right. Oh, that's it. That's all the questions. Cool beans. It's 11:35 p.m. Las Vegas time. We're here in Sin City having fun. Thoughts on Apple? Will, let's take a look at Apple real quick. AAPL. Here we go. Dude, sorry. I don't buy, Will, I don't buy at the high. Okay, it's at the high of the year. Okay, it doesn't make sense. Soyo, AGNC, AGNC. It's going to be my last one. All right. Ooh, AGNC. Interesting. Soyo, check a look at this. A year ago, we're here at $9.80. The bottom was $8.50. Top is $10.85. We drop down. We're right here. Look at this mess where we are. Let's take a closer look. Last 90 days. Okay. 90 days ago, we're here. Down, sideways. We're currently at $9.50. The 950s are going for 5 cents to 7 cents. Sorry. The numbers just aren't there. Koskan Ints. Interesting. What is your strategy if stock drops over 10%? Okay. Okay, thanks. You like that one? So, is it Igor? Wait. Igor. Kagdela. Пожалуйста. Спасибо. 10%. I don't buy a stock I'm not willing to hold. You take a look at any stock at all. You got a high, you got a low. It goes up, it goes down. It goes up, it goes down. Okay, never buy something you're not willing to hold on to. Most people buy a stock and just hold it for decades, years. Okay, I'm asking you to think differently. Okay, if I'm going to buy this stock here, it's currently at $9.45. Great. Can it go lower? Yes. Can it go higher? Yes. You said you will answer all the questions. Igor, I did answer your question. I'm answering it right now. What happens if the stock drops? If the stock drops, I keep selling options as it's going down, and I keep getting cash flow every single week. Okay? Now, I answer every question that pops up on my screen. As of this moment, there are no more questions. All right? It's 11:38. I got a long night. You guys have a great night, and we'll do this again tomorrow. But remember, tomorrow, okay, which is Sunday. Excuse me. Tomorrow is Sunday. I'm going to be back in St. Petersburg tomorrow night. So I'm on at 9 Eastern Standard Time. Okay? Right now, it's 11:38. I think it was Pacific Time. Okay? 11:38 Pacific Time. But it's 2:39 a.m. Eastern Standard Time. All right. So I'm done for the night. You guys have a great night, and we'll see you again tomorrow. Okay? You guys have a good night. And you guys down here, enjoy your night. I hope you'll... Okay, let me get out of there and get out of here. Done. There we go.